Have you ever wished you could just give a stock a full-on medical checkup? Well, that's exactly what we're doing today. We're putting AppFolio, that's ticker APPF, under the microscope with a really detailed technical report as of November 24th, 2025. So let's see what the doctor's diagnosis is.
And right out of the gate, the final verdict is in, and it's a pretty clear one. Bearish. But, a diagnosis is one thing. What are the symptoms that actually led to this call? Let's dive into the specifics.
It all kind of boils down to this one number, an overall technical score of 44.53. Now, in the world of this analysis, anything under 50 is basically a red flag. So, what does this bearish outlook for APFF really mean when you dig into it?
All right, so every good health check has to start with a high-level summary, right? So let's take a look at APPF's current condition. Just like a doctor would start by scanning the top of a patient's chart.
Okay, so this summary shows us the real tug-of-war happening here. The stock's trading at $228.62, and while it's below some key long-term averages and momentum is negative, there are also these little glimmers of a potential short-term recovery. It's a classic case of a patient that's clearly in a downtrend, but is showing a few positive vital signs.
Now, to really understand any diagnosis, you've got to look at the patient's history. So let's pull up APF's recent price chart and see exactly how it ended up in this particular condition.
You can really see the story unfold on this timeline. I mean, back in September, the stock was flying high, nearly $289. But then, bam, a pretty serious downtrend took hold. It bottomed out around $217 just before this report was run. So this current price, it's a small bounce for sure. But that downward pressure is, it's undeniable.
And here's the 52-week range, which really puts all this into perspective. You can see the current price is sitting in the lower third of its range for the whole year. That tells you this isn't just some short-term blip, it's part of a much larger pattern of weakness.
Okay, now for the juicy part. Let's get to the heart of the matter, the actual vital signs that led to this bearish diagnosis. We're going to start with one of the most critical indicators for figuring out the overall trend, moving averages.
Just a quick refresher here. A moving average is kind of like taking a patient's average temperature over a full week, instead of just for one day. It smooths out all that daily noise so you can see the bigger picture, the real underlying trend.
So, what's the big takeaway here? It's simple, really. When a stock's price is consistently trading below its key moving averages, it's a classic, textbook signal that the sellers are in control. It's like that patient's temperature being consistently below normal, a clear sign that something just isn't right.
And this table just breaks it down perfectly. In the super short term, things are kind of mixed. That suggests we might be seeing a little pause in the selling. But look at the medium and long-term averages. They tell a totally different story. The price is clearly below them, which confirms that the dominant trend is absolutely down.
And hey, it's not just the moving averages. A whole bunch of other key indicators are flashing red. You've got the MACD, which measures momentum. That's negative. Trend indicators like the ADX and a Rune oscillator, they both confirm this downtrend is for real. Even the volume indicators are suggesting more money is flowing out of the stock than in. It's a whole collection of symptoms, all pointing to the very same diagnosis.
But wait, is it really all bad news? I mean, a good diagnosis always looks for the nuances, right? And this report does a great job of highlighting some conflicting signals. Some symptoms that suggest a short-term recovery might just be on the horizon, despite that gloomy overall outlook.
And don't just take my word for it. This is a direct quote from the source material, and it's a crucial one. It points to signs of potential recovery. The patient might be weak yet, but it's not totally out for the count just yet. So, what exactly are these signs?
The key word here is oscillators. The easiest way to think about these is like a stock's short-term energy meter. They help us see if a stock has been sold off way too hard, way too fast, what we call oversold, or if it's been bought up too aggressively, which is overbought.
This slide just captures that tug-of-war perfectly. On one side, you have these powerful, prevailing bearish factors. The price is way below its 50-day moving average, long-term momentum is negative, the works. But on the other side, the short-term energy is showing signs of life. Those oscillators are deep in oversold territory, which suggests that maybe, just maybe, the selling is simply exhausted for now.
So, with all this conflicting info, what's the prescription? What does this actually mean in practical terms if you're an investor? Let's look at the report's key levels to watch and what they might signal for the stock's future.
Okay, so the report gives us some really clear lines in the sand. For any kind of balance to have a real chance, it has to clear that first hurdle at $231.36.
On the downside, it absolutely has to hold the floor at 223.60. But the real test, the sign of a true turnaround, that would be reclaiming that critical 50-day moving average way up at 250.31.
And here's something else for investors to keep in mind: the stock's typical daily mood swings. The average true range, or ATR, is about $9.45. All that means is that on any given day, the stock could move by that much. So it's a name that definitely sees a decent amount of action.
All right, let's bring it all home with the key takeaways from this health check. Number 1, the overall diagnosis is still bearish. 2, a little short-term bounce is definitely possible, but it's probably just a relief rally, not a full recovery. 3, that long-term downtrend is the dominant force here, no question. And finally, the core advice is pretty simple. Wait for confirmation of a real trend reversal before you even think about getting optimistic. So at the end of the day, this entire report leaves us with one crucial multi-million-dollar question. Is APPF locked into a confirmed downtrend where every little bounce is just another chance to sell? Or is this all just a temporary pause, a consolidation, before the stock finally finds its footing and starts to climb again? That right there is the question for investors to watch.